if you are in franchising, you may have heard about FASB's revenue recognition rule and how IFA, the International Franchise Association, helped to get franchisors basically a grace period where they don't have to apply this new revenue recognition rule. And so a lot of people are probably thinking, yay, that's great, wonderful. But what is that again? I don't fully understand it, but what is it? And so I wanted to do a video to basically break down a few of those points. And so I'm going to do them here. I first want to start with the understanding that the way that business finances work is different than personal finances. So when you have a business or a personal finance, you have an account. That account has a direct one-to-one relationship. So money goes in as credits, debits go out as expenses. And so it's easy to be able to track what's happening with your accounts and what's going on with your accounts. With businesses, that situation is turned a little bit. And that's because money comes in and it shows on 3 different statements. Those statements are the profit and loss or income statement. It is the cash flow statement or statement of cash flows. And then it's also the balance sheet. So the money goes in and it's reported on each of those 3 statements. But where it sits and how it goes out is recorded in different statements. So it's not standard across all 3. And so if you are not familiar with business finances, that can be really confusing. And so that kind of sets the foundation for why this FASB rule is confusing and creates a challenge for franchise systems. The next thing I want to share with you is that the rule is basically saying that when a franchise system sells, let's say 3 units to a candidate, and that new franchisee, they purchase the 3 units, they pay for either all 3 units up at once, or they'll pay a certain portion of the second and third unit. What FASB is saying is with the new guidelines, they're saying that you can only count the money for the first license that you're opening right away. And the money for the second and the third license, that has to be counted in the year that that franchise opens those locations. So why that is a problem or issue is because franchisees are front loaded and they come with a lot of expenses. And so the experience that a franchise system is having is that they're trying to help those franchisees get up and running as quickly as possible. And that's expensive, much more expensive in those beginning years than in later years. Another issue is that the money comes in and it shows as a liability for that second and third location. So it's showing as a debt or a holding account in the liability section of the balance sheet. And when it does that, when people look at this is prospects who are looking at buying a franchise or a candidate that's looking at purchasing a franchise. When they look at those statements and they see that there's this large liability section, then they can sometimes think, oh, well, this doesn't look good. They don't have strong financials. Maybe this system is in trouble. And so it can be confusing to somebody who is not going into the detail. And it's even confusing on the accountant side for how to explain and cover that information in the details of the franchise disclosure notes. So that's a really important thing. If the buyers or the candidates are not able to really spend the time or look through that information, well, then they're going to discount franchises, which may have been a really good option for them. And then people just don't necessarily fully understand what this revenue recognition rule means and how it applies. And so even the regulators are saying that they've been getting reports and disclosures in that have been very confusing. And so the regulators are having trouble and going back and forth with the franchises trying to get clarity about how strong the financial position is of that franchise and how these things are going to be reported. So if you'd like to learn a little bit more about it, we have a blog which we'd love to share with you. And we also have an excellent team of accountants who can help you kind of decipher this information. If you're a franchisor, that's really important because, like the regulator said, there are all of these accountants that are submitting information on those franchisors' audits, and they're doing it completely wrong. So you want to make sure that you have a good accountant who understands these things, and we can get you in touch with one. Also, if you're a candidate that's looking at a franchise, you want to make sure that the numbers that you're looking at are good, solid numbers. And so if you'd like to talk to a broker who can help you to understand those things, then we'd love to talk to you as well and are happy to help you with that. Thanks.